Hello everybody, it's Dan here from InfoUs. Hope you're all doing well. So let's do a market update, a review of what's been happening in stocks. So it's very interesting. We've got the S&P 500 after dipping back. We had this kind of little bit of a panic shakeout. That brought us back into this range here, but quickly changing afterwards in August, beginning of August, where we started to just retrace this whole move here. Now we're near all-time highs, and mainly because today of the inflation report that came out, the CPI report. So you can see here that today was really interesting, where we had the CPI numbers come in just basically in line. Nothing hot, nothing bad, nothing amazing as well, but in line. And that kind of gave markets a relief, right? Because there was an expectation that, oh, the tariffs and how it's going to impact inflation. We're going to see hot inflation due to tariffs. But we got an inline number. And that caused stocks to basically shoot up higher when the number was released. But later, when the market did open, we did see a move down lower. But that quickly got bought back up, and we did see markets grind up higher for the rest of the day. So we saw that in S&P 500. We saw that as well in NASDAQ. We saw the same thing in Russell 2000, which is a small cap index, and the Dow Jones. Right? Dow Jones, Russell, they were the two strongest ones today. And then you got the S&P and then NASDAQ performing behind these two. Now, going back to the S&P 500 on more of a longer time frame, with the inflation report that we see that came out, this could give some sort of legs towards S&P 500 continuing to move up higher in this trajectory. So, you know, if I were to measure this a little bit here, we could see it's about, possibly the S&P 500 moving up to the 2,693 area. And getting closer and closer to that trend line. Now, what's very interesting is the positioning side of things. We have large speculators still short, still on not bullish on the S&P 500, which gives it more room for it to move up higher. The Russell 2000 massively short. More speculators are shorting as this is going up higher, which gives more reason for Russell 2000 to also move up higher. Same thing for the Dow Jones. Now, it tried to hit this and break all-time highs, but it couldn't. But we could see move up higher due to possible rate cuts that could come, especially after the inflation report that we got, right? Now, the inflation report that we got doesn't solidify a 50 basis point rate cut. We can see a 25 basis point rate cut, but it doesn't, the expectation of a 50 is very, very unlikely. In terms of NASDAQ, now NASDAQ, the tech index here, right at that trend line here. And in terms of positioning, now, price action wise, it continues to move up. In terms of positioning, you not only have large speculators massively long this index, but you have also now small speculators coming in and buying a lot of these tech companies and pushing NASDAQ higher. So I still am on the boat of preferring S&P 500 over NASDAQ from a positioning point of view. Now, In terms of other markets, we get into this in our private Discord chat room. If you're interested in that, you can subscribe. It's about $2 a day, $60 a month. And we go over bonds, currencies, metals, energies, crypto, and you name it. And crypto, especially Ethereum, is having quite of a day, right? Especially Ethereum moving up higher, which is basically sending the sentiment for the altcoin markets. But more of that in the private Discord chat room. Now, also, what I typically don't do here, but I will discuss it anyways. It was pretty interesting to see after today's inflation report. See certain sectors do well. So we did see a risk on sentiment, mostly in communications, the XLC ETF, also the XLK ETF. So a lot of like the tech companies, telecom companies basically do pretty good today after this inline inflation report. We also saw materials also pick up quite a bit today. We also saw financials, do well because of the lower inflation, lower rates, and that helped financials move up higher. And then also discretionary, also telling you a sign of risk on sentiment as well, due to lower inflation, lower rates, more money in people's pocket. But what's very interesting here, you would think lower inflation, lower rates would lead to real estate doing well. But the real estate ETF, XLRE didn't, what basically was the laggard and did not perform that well. Now, why is that, right? There could be multiple reasons. One is that not enough rate cuts. One is fear of growth. One is, they're expecting maybe 50 basis point rate cuts, not 25, but you're still going to get most likely 25 basis point rate cut in September. Unless, if we don't, then we could probably see some weakness happen in this ETF, right? We also saw the same thing in staples. And there's also, I forgot to also mention another thing. With staples and real estate being the laggard, this is also telling us that more money was moving towards risk on sentiment than more of the, I wouldn't say risk off, but more of the safe haven kind of positions. So it does make sense on a day like today, where money was flowing towards more of the tech than more of the staples and the real estate. But still, if you were to think from just a real estate point of view, you wouldn't think it would be last on today's performance, especially if you expect better rate cuts to come. So pretty interesting to see this play out today. This was the performance today, and it was pretty interesting to see also the correlations in equities and bonds and how they continue to grind up higher and higher. So I think it will be quite interesting to see, even though we are here end of middle of August, approaching the last 2 weeks of August, things will probably slow down, probably be much quieter. Before September, before the September Fed meeting, also before we've got the Jackson Hole event as well, so it'll be interesting to see if Powell mentions anything there. But I think it will be kind of quiet and boring maybe until Jackson Hole event, and especially in the last 2 weeks of August. But hey, anything can still happen with Trump or any kind of headline news that could come out. Other than that, there's also a theme where you would basically get, market participants would basically get ready for selling equities, especially before September, as that's known to be that month is known to be more rockier than usual. And you could see some maybe selling pressure that could come during that time or before that time. But hey, let's wait and see what happens. For now, we are seeing this quite bullish move up higher, and we're seeing even with negative news, right? Like, for example, with Nvidia, all the news about Trump taking 15%, Nvidia giving 15% to the government on chip sales being, chip sales being done in China, and that being given to the U.S. government, and then China's, talking about how they're going to restrict certain chips from Nvidia, or be telling their Chinese tech companies to not blindly, foolishly buy these chips from Nvidia. But Nvidia continues to basically shrug all that negativity and that news, right? It could be, people are done with the idea of fear and Trump, and people know that it's Taco Trump, so Trump will always chickens out, so not a big deal, shrug it off. But Nvidia continues to do so and continues to move up higher, which is very, very interesting to see here. So anyways, that's just my take. Let me know what you guys think. Leave a comment below, subscribe, hit the like button, bell icon to be notified next video, and I'll see you guys around. Cheers, bye.